Ladies and gentlemen, welcome back to the channel. This is going to be a very exciting video. And let me give you a brief rundown of all that will be discussed here in this video. So, as you guys probably know, this is going to be a very important upcoming week as far as economic data. You are going to get the first inflation report in months that is expected to have risen at a very aggressive pace, and we'll talk about the market's current expectations. Now, we'll run through the rest of the economic data as well that we're going to get next week, but that is going to be the main event coming on Valentine's Day. So happy Valentine's Day on Tuesday. You might get smacked around a little bit, or the markets are going to be quite ecstatic coming Valentine's Day. So it's going to be a big day regardless. Some people are going to be happy. Some people are going to be very sad, at least in my personal opinion. Now, as far as AMC stock goes, this is what I'm really most excited about here in this video, because I want to kind of break down what this reverse stock split situation, the shareholder vote that's going to be taking place on March 14th could do to AMC. What's the good? What's the bad? And what do I personally expect? Now, there's obviously a lot of potential outcomes here, but I think there's only really two ways that this is going to play out, at least in my personal opinion, and I think it's going to be bullish. So we're going to get into that here in this video, as well as that we are going to look at Bed Bath & Beyond. Yes, I had some people asking. It is on the threshold securities list, as well as AMC stock. So we're going to talk about that relationship as well between these two equities and why you're literally sitting on a powder keg, as well as all of that information. If that was not enough for one video, we're going to be going over all of the data behind AMC stock. So let's get into this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Now, later on today at about 5 p.m., we are going to be posting a video of an actual price prediction on AMC, where I personally think the stock will go. And I think that will also be exciting as well. And we'll kind of string together the information from this video to that video, although I don't want to make a 35-minute long video to bring you guys all of this information. So let's get into it. So first things first, I want to talk about this reverse stock split situation, because this is the most highly debated thing with AMC right now, is what is this reverse stock split going to do for AMC in terms of the actual share price. Now, there's two ways to look at this, at least in my personal opinion. And really, there's ultimately only one way to look at this, right? Why do hedge funds short stock? A stock of a certain company, right? It could be fraud. It could be something else. Obviously, not the case with AMC. But most of the time, I would say about 90% of the time, hedge funds short stock because they think it's overvalued. And especially when you get long-term shorts in these short positions, like you're seeing with AMC, with Bed Bath & Beyond, with GameStop, they're literally betting the company is going to go bankrupt. They're betting the company is going to go to zero. Because if you have a good profits in a name like AMC, GameStop, Bed Bath & Beyond, in which if they shorted the stocks in June of 2021, or even at really any point in 2022, be it not the last couple of weeks because AMC is up, then they are up substantially on their positions. Why not cover at this point? Why are we not seeing the short interest gradually going down on all of these names? Indeed, you're seeing the opposite happening. The short interest is actually rising. It's because they are making a bet these companies eventually, keyword eventually, will go to zero. Now, AMC, Bed Bath & Beyond, GameStop, they all have their plus and minuses. I would say AMC's the strongest one out of all of those, just fundamentally speaking. Now, that brings me to the fundamentals. With this reverse stock split and essentially letting AMC convert the apes into AMC, this could potentially raise as much as $22 billion, with a B, dollars for AMC. Now, what would that do for the share price at that point? Well, this is where it gets a little confusing, because obviously you would see some dilution there, right? Just obviously. One would say you've already seen dilution, though, because after all, APE and AMC, they're really the same thing. So you've already kind of seen this dilution. It just hasn't been recognized yet by AMC in terms of actually getting the capital for these ape shares by and large, right? When you talk about $22 billion, the couple odd $100 million AMC has raised, it's pennies in, or drops in the bucket, I should say, right? Pennies in the wishing well. Now, the best way that I like to look at this, the most likely outcome, I should say, is if AMC is able to raise anywhere close to $22 billion, sure, there might be some dilution, but if they raise that kind of money and now they are a debtless company and they have a ton of money on their balance sheet, at that point, there is zero chance AMC is going to zero anytime soon. Like, it would have to take a real fuck up from AMC's management to go to zero. So that's not likely, right? So if AMC can fundamentally improve by paying off its debt, by ensuring the business will be around for, 5 years, 10 years, 20 years, who knows with that much capital, and getting to a place where they will be profitable again here in this year, in 2023. Well, I think that instantly means if you have a short position on AMC, you want to GTFO the hell out of there, right? The last thing I would want to do is think, yeah, this company's going to zero. Maybe it'll take 5 years. Maybe it'll take 10 years, however long, right? Probably hedge funds thinking 2 to 3 years AMC's going bankrupt. That's what I would say. Now that's not a possibility. Now you need to cover on your short positions, especially as, hedge funds do presumably still have gains at the time. So that's the way that I look at it. Even if you do see dilution, what's the end result of that? AMC fundamentally improving, which is the number one thing that squeezes shorts out of their short positions. Why do you think, for an example, Tesla just went from $101 a couple of weeks ago, now over $200? It's because people had it all wrong, and Tesla proved them wrong, and they covered on their short positions. Tesla's increase was a short squeeze, not as explosive, right? It took a week or two, maybe 2.5 weeks. I can't even remember. It was like 2 weeks ago when they reported earnings. So long story short, even if you get a negative, I think it's still a positive, believe that or not. And if you guys have been in the markets for a while, you know how these things work and how kind of hedge funds think about short positions. It's fairly obvious for you guys to see. Now, I really don't care what happens, to be quite honest with you guys. I think either way, there's so much convincing evidence, a short squeeze is coming. But that's at least the way that I think is most logical to think about this whole reverse stock split situation, converting APE into AMC. Now, as far as the data is concerned with AMC and BBBY, Bed Bath & Beyond, they are both on the threshold securities list. So how this relationship kind of goes hand in hand, at least in my personal opinion, and maybe they are not on the threshold securities list anymore. Okay, they're still on the threshold securities list. You guys see it right here. 48% short interest. AMC at 23% short interest. Both very, very, very high. AMC has a larger dollar amount that is currently sold for. I believe it's about $700 million. We'll take a look in just a minute. Bed Bath & Beyond has $144 million of short positions on the name. But if Bed Bath & Beyond, does prove that they can turn something around, and not even that. Don't let me go too far into that, because they just raised $1 billion. If they raised $1 billion and they at least have enough capital to stay alive for a year or more, 48% short interest is very excessive. And you're even seeing analysts saying the same thing. You're seeing Vanguard going out and buying Bed Bath & Beyond, while at the same time they've also been buying AMC. Now, some people can speculate and say they're doing that to lend out shares. Well, sure. Doesn't matter ultimately if they're lending out stock. If Bed Bath & Beyond goes BK, if they go bankrupt, Vanguard's still going to lose money. So I think maybe that's correct, at least in a very short-term time frame. But as time continues on over the next week, 2, 3, 4 weeks, I think that puts a lot of pressure on the shorts. And I don't think it's something they expected. Everyone thought Bed Bath & Beyond was going to go bankrupt. Same thing with AMC. So hopefully you guys are catching my drift here. Hopefully you learned something out of that rant. Definitely a decent little rant for you guys. Let me know your comments down below in the comment section on all of that information. Now let's take a look at the Ortex data for AMC. Like I said, 23.04% short interest of free float. AMC is on the threshold securities list. You do have 118.66 million shares that are sold short. And as of right now, the dollar amount sold short in AMC is $634.74 million. And a lot of people like to say it's not, necessarily what the percentage of the short interest is, but the overall dollar amount that is sold short. And you can see that pretty relevant with something like a Tesla. And I'm just going to use that example because it's been squeezing as of lately, right? It's the most aggressive rally you've seen in the history of Tesla. Not too many times. It's doubled in the course of a week and a half, 2 weeks. Tesla's short interest was only ever about 3%. But with that 3% short interest, there was billions of dollars sold short against the name. I believe like $10 billion. So it can give you a pretty big move to the upside. So long story short, guys, I do think there is more potential with AMC, but I think both of these names, if Bed Bath & Beyond gets good news or AMC gets good news, it could spark one or the other. Now, cost to borrow rates for AMC sitting at 307.27% for the cost to borrow average, cost to borrow max 358.94%, and cost to borrow minimum at 0.35%. 60,000 shares available to be traded as of yesterday with a 167.46% cost to borrow rate. If we take a look at the Stocko tracker data for this upcoming week, you do have 5,000 calls that are currently in the money, 293,000 calls that are out of the money, 98,000 puts in the money, and 268,000 puts that are out of the money. So these ratios here, right? A lot of puts in the money compared to not a lot of calls in the money. Lots of calls out the money. A lot of puts out the money as well. This can lead to a lot of buying pressure, right? If just imagine this in simplest terms. AMC stock goes up. Calls obviously go into the money. So market makers, if you're buying a call, right? Let's say a $10 call for simple math here. If you're buying a $10 call, right? 90% of options, the back end is done by market makers, right? So if you buy a $10 call, let's say AMC is just ripping, just going absolutely parabolic. It goes to like $9.90 per share. Well, technically, if you own a call, you have the right to buy shares at that price by that expiration. So if that's the case, the hedge funds aren't going to wait until the stock's $10 to hedge out the stock or $11, right? Because they would lose money because you get the shares at 10. If they got to buy them at 11 and give them to you at 10, they're losing $100 per option. So what do? They go out and they buy stock. That is literally how a gamma squeeze works. Explained to you in about 35 seconds. Now on the put side, the same exact thing, but on the opposite side. So when the puts are in the money, say a $5 put, let's say it's in the money, right? That means that you have the right to sell your shares at $5. Well, if the market makers gotta give you stock, right, or buy the stock from you, I should say, and let you sell it for $5, well, they gotta acquire that first. So when AMC goes up, the calls that are in the money as well as the puts that are in the money both add to buying pressure to the upside. And there is a substantial amount of puts, 98,000 that are in the money compared to only 5,000 that are in the money. It could cause a pretty big move to the upside. Now, the last thing that I want to talk about here in this video is going to be the economic calendar. So here with the economic calendar, you're not going to get anything on Monday. You are going to get Fed Bowman that speaks at 8 o'clock in the morning. Not going to be a big deal because on Tuesday, the inflation rate year over year for January, you are expecting 6.3%. Last month's reading was 6.5%. Now, core inflation rate year over year, this ain't going to matter as much as well. really it's the month over month that's going to matter to investors. So core CPI rate month over month, or core inflation rate month over month, is how it comes up here on the calendar. You're expecting 0.3%. Last month was 0.4%. So it was even high last month. You're expecting a slight downtick for January. If this comes in at 0.4 or even potentially 0.5%, you're going to get an epic freak out by the markets. Now, the core inflation rate or the inflation rate month over month, you are expecting 0.4%. That's the headline reading. That is including food and energy. Last month's reading was 0.1% of an increase. So you're expecting a big increase in headline CPI. And I think, is it too wrong to say? But I think the Fed already knows the inflation rate is going to come in really, really hot. And that's why they've been kind of prepping the markets for a higher terminal rate over the last couple of days. Now on Wednesday, 8:30 in the morning, you get retail sales month over month for January. Last month's reading was negative 1.1%. You're expecting 1.2% of a gain. So you're expecting, to have been negative in December to being positive in January. Now, on one hand, it's going to be good if retail sales are positive, showing the economy is likely doing okay. People are still spending money. But if it comes in, 1.2%, it might freak out the markets because, hey, that's going to mean the Fed will have to raise rates longer and keep them higher for longer as well. Now, on Thursday, you got building permits preliminary for January. Not going to be important. PPI month over month, you're expecting 0.2% of a gain. Last month was negative 0.5%. So you are expecting a producer price index or producer price inflation to have went up as well. And then at 8:30 in the morning, you're also going to get initial jobless claims, expecting, it says 198,000. I'm not sure if that's the exact number or the right number there. Just because I believe that's what last week's expectations were for initial jobless claims. So we will see on that one. That is to be continued. And then on Thursday, you're also going to get a lot of Fed speakers, a lot of them coming on around noon, all the way from noon until 6 p.m. You're going to get Fed Master, Fed Bullard, on Fed Master twice actually, and ECB speakers as well, a lot on Thursday. And then on Friday, you're not going to have anything. So Friday's going to be the most docile day, in my personal opinion. Who knows? Maybe the markets are in the toilet by then. Maybe that's premature to say, but there's not going to be any economic data for Friday. Now, we're going to be going over the economic calendar again in the next video and going over a price prediction for AMC stock, at least from my point of view, for this upcoming week. So a lot of implications here. A lot can happen in a week and a lot can happen with AMC and your money. Hit that like button and subscribe to the channel, especially if you made it to the end of this video. But most importantly, enjoy the rest of your day and I will see you in the next one.